So your question is, how do I buy a rental property? In today's video, I'm not only going to answer that question, but I'm also going to show you the best way to maximize your profits so you can become a millionaire quicker. Hi, I'm Ted the Real Estate Guy, and if you'd like to stay up to date on the latest real estate tips and trends, subscribe to my channel below and ring the bell to be notified each time I post new videos. If you have questions about buying, selling, or investing in Utah, I would love to talk with you. Please feel free to type a message below, or you're welcome to contact me directly. And remember, you'll want to watch this video all the way to the end, where I'll show you how to make the most money possible by investing in real estate. So you're wondering how to buy your first rental property. Well, there's 6 simple steps to drastically increase your chances of success. Number 1, decide what type of property you'd like to invest in. I prefer single family homes, but others have found a lot of success owning condos, townhomes, multifamily units, or even commercial buildings. There are actually loads of options, and they each have their own benefits and drawbacks. A commercial property might build equity a lot faster than a single family home, but you may need a much larger down payment, and there could be more risk involved. Or you can usually purchase a condo or a townhome for less than a single family home, but the monthly HOA payment could make the property less profitable. There are loads of scenarios, so you want to do your research and find out the one that makes you feel the most comfortable. If possible, find a property that's profitable from the very beginning and one that will build good equity over time. Make sure you understand your cost versus your profits. Number 2, decide how you'd like to make money from that property. You can rent the property out traditionally as a long-term rental, or you could turn the property into a vacation rental. My most profitable property by far is a vacation rental on the North Shore of Oahu in Hawaii. I'm most proud of that purchase because it's something I hadn't considered initially. And as an investor, you should also consider seller finance as an option. I earn more money on my seller finance properties than I do on my rentals, and they're completely hands-off. You heard me right. No maintenance, no complaints from the renters, and the monthly payment is deposited directly into my account. That's why we call seller finance rent on steroids. There are loads of benefits to seller finance. If you'd like to learn more, I've created a video that goes in depth on seller financing. I'll put a link to that video below. And you'll want to watch that video when you're done with this one. Education is the key to your success as a real estate investor. Research the many different paths you can take and decide which one suits you the best. Okay, now that you know the type of property that you'd like to buy and you understand your profitability, it's time to move on to step number 3. Start looking for available properties and analyze those deals. In other words, find actual properties and run the numbers on a few of them to make sure you can get an acceptable return on your investment. This is why I love investing in real estate. It's predictable. I also enjoy the stock market, but there's a lot more risk and you can't leverage your money like you can with real estate. When I purchase an investment property, I can predict with fairly good accuracy how much money I'm going to earn in both rent and equity over time. And for those of you who are still trying to decide where and how to invest your money, real estate has proven to be one of the safest, most profitable investments one can make. But once again, before you purchase that first property, practice running the numbers on multiple properties to see what type of profits you can earn. The more you practice, the better you'll understand the profitability of different areas you're considering. If you do this, you'll make more money off the property you purchase when the time comes. Number 4, get pre-approved with a bank or a lender. Really, this could have been moved to step number 1 because you should have a solid understanding of not only how much money you'll need to put down, but also what your monthly mortgage payment is going to be. As an investor, you'll most likely need 20 to 30% down. But like I mentioned earlier, you'll want to keep watching this video because I have a real estate investing strategy that will ensure you get the best mortgage rate possible and allow you to put very little money down. But the obvious advantage of speaking to a lender is that you'll now know exactly how much money is required to purchase a property and what your monthly payment will look like. Can I ask, what's stopping you from buying your first investment property? Seriously, I want to know. Please take a moment and comment below. Also, would you please give this video a thumbs up to support my channel? I would appreciate it more than you know, and that thumbs up will help others see that this video is helpful. Thanks. All right, moving on to number 5, hire a real estate agent. There's loads of advantages to hiring a realtor. They will handle all the paperwork when you submit an offer. They can help you negotiate the best price and terms, protect you from costly mistakes, and most importantly, help you find the best properties by putting you on a hot list for the type of property you're looking to purchase. And yes, this is one of the top secrets of successful real estate investors. Heck, most realtors, when looking to buy an investment property, will put themselves on a hot list, receiving those automatic emails to let them know when new properties come available. You'll save time and money when the best deals are coming directly to your inbox. Number 6, start making offers. In a hot market, you might have to pay more than the asking price, and that's fine so long as the numbers still work. But it's a lot easier to find deals in a stable or stale market. Either way, start making offers on properties you know will be profitable. The awesome thing about making offers is that it's free and there's zero risk. Yes, you will need to put down an earnest money check for each offer, but you can get that money back should you find something you don't like about the property after having an inspection. If you make an offer and it's not accepted, you just move on and make another offer on a different property. The most successful investors will often make dozens of offers before finding someone who is willing to sell their property for less than what it's worth. You should make at least one offer per week. And even if you're only looking to buy that one property, there's nothing wrong with submitting offers on 2 or more properties at the same time. Reminder, a good realtor can safely guide you through this process. Okay, that's it on the 6-step process, but there's a few more important things to consider as you look to purchase your next property. For instance, you want to consider the cost of buying an old home versus a new home. While you can usually get an older home for a lower price up front, your cost on the back end to repair and replace things will certainly be higher. I once chose to build a home with the intent to rent the place out. After the 8-month home build process, that home had already increased in value by $30,000. How cool is that? I was also able to charge a premium for rent and had 0 repairs. This is a good reminder to consider all avenues when the time comes to buy your first property. Okay, what about buying a townhome or a condo versus a single family home? Condos and townhomes are usually in a homeowners association, also known as an HOA. This has its advantages and disadvantages. On the plus side, the yard is often maintained by the homeowners association, but the big downside, HOA fees can be expensive and they can always increase, sometimes significantly. Most single-family homes do not have an HOA, but then you as the owner are responsible for yard maintenance. I try not to buy in HOAs, but it's not always a bad thing. You just need to weigh the cost of the HOA against your profit margin and see if it's worth it. There are actually dozens, if not hundreds of things to consider as you decide what type of property you should buy. I just wanted to mention building a house and HOAs because these are 2 things that people often don't consider. Now, as promised, I'm going to show you how to maximize your profits as a real estate investor. And your ability or desire to invest in real estate this way often increases or decreases depending on a few factors. For instance, a 25-year-old will usually invest differently than a 45-year-old. Or someone who's single would have more options than someone with a family. So the way you buy real estate depends on what stage of life you're in and whether you have the ability to move out of your primary residence. Most real estate investing videos focus on getting a good deal on the property. Obviously, that's important, but there are other things you can do to drastically lower your cost and significantly increase your profits. And this is what I wish someone would have told me years ago. So here we go. This is the safest, most profitable way to make money in real estate. If you don't own a house yet, the best path is to buy a home for you to live in. If possible, rent out a portion of your home. Someone who's single may rent out the rooms in the house, while a young married couple might look for a duplex or a house that will allow them to rent out the basement. After 2 years, turn that home into a rental property and buy a second home to live in, repeating the process mentioned above. Then, after 2 more years, purchase your third property, repeating the process. This is the most profitable option for many reasons, but mostly because when you purchase a home as your primary residence, you get the best mortgage rate possible. This will significantly decrease your monthly payment. You can also buy properties faster because you don't have to put as much money down when you're buying a home for yourself. There are so many benefits to investing this way. I call this program the 310 Real Estate Investing Strategy, where you simply purchase 3 homes over a 10-year time period. If you follow my program starting at a young age, you will become a multi-millionaire by the normal retirement age of 66. If you already own a home, you can just follow the process mentioned earlier. But if you're like me and you want to stay in your current home, the process is a little different. Lenders will see you as an investor, which means they require more money down and they'll give you a higher mortgage interest rate. Next, you'll want to research what different properties are renting for in the area. This allows you to figure out what your profit margin will be. Often, people find that the rent they can collect is lower than the mortgage payment. Some investors would tell you not to buy a home in this situation, but if you live in an area where home values are increasing, you could still find yourself in a very profitable situation in the very near future. A lot of people don't consider that rent increases by approximately 4% each year. Remember, this can vary drastically from one location to another, so make sure you understand your local housing market. As the cost of rent increases each year, a wise investor will also increase the rent on their properties. For instance, if you're charging $1,500 per month rent in the first year, you could increase that monthly rent to $1,560 the next year and continue to increase rent by approximately 4% each year. Just 5 years later, you could be earning $3,500 more than what you earned in that first year. If you're planning to move to Utah or you already live here and you're looking to buy, sell, or build a home, I would love to talk with you. Please feel free to contact me directly. If there's something in this video that stood out to you as being helpful, or if you have a question, please comment below. Sincerely, I want to hear from you. If you know someone who's thinking about investing in real estate, please share this video with them. And please don't forget to hit the subscribe button below and ring the bell to be notified each time I post new videos. Also, you can find me on Instagram at Ty the Real Estate Guy. If you found this information helpful, please give me a thumbs up. Thanks for watching, and don't forget to ring that little bell below. It'll make you feel good.